Welcome back to Talk Tickers, where we break down the earnings calls that matter. Today, we're digging into Cavco Industries. They just dropped their latest quarterly report, and wow, the stock took off. So, we're going to break down exactly what got investors so excited and hitting that buy button.
All right, let's just get right to it. The market did not waste any time rendering its verdict. The stock jumped over 5% on the day of the call on some pretty heavy volume too. Now look, that's not just a little blip, right? That is a big vote of confidence in what the company is doing and where it's headed.
So, why the big pop? Well, as we're about to see, it wasn't just one single headline number that did it. It was this perfect mix of really solid execution across the entire business, plus a frankly very compelling story for what's coming next. Okay, so where does this story begin? It always begins with the headline numbers, right? And Cavco delivered a super clean beat on both revenue and earnings. They didn't just squeak by, they sailed past what everyone was expecting. Let's kick things off with earnings. They posted earnings per share of $6.55. Now you might be thinking, is that good? Well, Wall Street was looking for something around $6.30. So yeah, they didn't just beat, they pretty much crushed it. That's the kind of thing that gets the market's attention.
And it wasn't just on the bottom line, the top line was just as impressive. Revenue came in at $556.5 million, which, again, blew past what the street was expecting. That was about $543 million. This tells you demand is strong and that they've got some serious pricing power. But beating on revenue is one thing. What's really interesting here is how they did it. This is where the real magic happens. It's the operational leverage. Look at this. Gross margins popped up by 130 basis points. That's a solid 1.3% jump. And get this, operating profit skyrocketed by over 26% compared to last year. I mean, that is just a textbook picture of efficiency at work.
Okay, so the numbers look great, but what's the story behind the numbers? That's where management's commentary from the call comes in. And they laid out a really clear picture of how they're navigating this kind of tricky market, pointing to three key drivers for their success.
And this is super important. It's really a tale of two different regions. Management was straight up about it. The Northern U.S. is on fire. Demand is super strong. But the Southeast? A bit soft. Now here's the smart part. They've already pulled back production in that weaker region, and things are starting to stabilize. This shows they're not just reacting, they're proactively managing the business. That's exactly what you want to see. And oh my gosh, look at this chart. This shows the absolutely massive turnaround in their financial services business. I mean, look at those margins. They more than doubled from under 22% all the way up to over 55%. How? Management said it's all about disciplined underwriting and managing claims better. This part of the business has gone from being, just okay to an absolute profit machine. They also dropped a really important update on their big acquisition, American Homestar. They said the integration is, and I'm quoting here, moving quickly and very well. This is huge because Homestar is a key piece of their future growth puzzle, adding factories and retail spots, so hearing that it's on track, that's music to an investor's ears. And I think this quote from the CEO, Bill Bohr, really sums up the whole tone of the call. He says, it still does feel like a balanced market in many ways. It's not overly hyped, it's not panicky, it just signals that they're in control, they see the whole picture, and they know exactly how to handle it. All right, so that was an amazing quarter. But the big question is always, what's next? What does this mean for the next earnings report? Well, the stage is definitely set, and there are some really clear things we all need to be watching. So when that next call drops, here are the 4 things I'm going to be looking for. First, are we going to see some real synergies from that American Homestar deal start to show up in the numbers? Second, are these incredible financial services margins for real, or was it a one-time thing? Third, can the strong northern markets keep up the momentum through their busy season? And finally, the big one for everyone, any relief on interest rates would be like rocket fuel for the entire industry. So when you put it all together, the fantastic operational performance, that incredible turnaround in financial services, and these really clear catalysts on the horizon, our call on TVCO is a solid outperform. We think this company is just really well positioned to keep firing on all cylinders. Okay, last but not least, let's talk about the trade. Based on everything we've just discussed, how might an investor or a trader actually position themselves for what's next? So for all you traders watching, what's the move from here? I mean, the stock already had a nice pop, but this whole story suggests there could be more gas in the tank.
So here's an idea. The whole thesis here is that the market still isn't fully pricing in the earnings power that's coming from the Homestar deal and those new, structurally higher margins in the finance division. So the play could be buying some slightly out-of-the-money call options that expire right after the next earnings report. The goal? You're trying to catch that big upside move if they deliver another beat and raise quarter. Now, what's the risk? Well, if the Southeast gets weaker or the integration hits a snag, that could definitely put some pressure on the stock.
And that's our deep dive into Cavco's killer Q2 earnings. It's a really compelling story of a company just executing beautifully. And as always, please remember this analysis is for informational purposes only. This is not financial advice.